Hello and welcome to the XQCPA channel, where we share with you the latest and greatest tax tips and business news. At XQCPA, we understand that filing and paying taxes can be a daunting task for many. After all, who wants to give their hard-earned money to the IRS? However, it is part of our duty as Americans to pay what we owe, and there can be consequences for failing to do so. But what are they? There are many different types of penalties the IRS may send you a letter or notice for, but failure to file and failure to pay are the most common to affect regular Americans. Though failing to pay your taxes can set you back financially, failing to file in the first place usually means a much higher penalty. The failure to file penalty begins at 5% of unpaid taxes for every month you do not file your tax return based on the original payment due date. This means that if you did not file an extension before tax day, you cannot operate on the assumption that you will have until the extension due date to file your taxes without consequences. Your failure to file penalty will decrease if you are also incurring a failure to pay penalty into a combined 5% for every month the return is late. Once you get to 60 days of late filing, the minimum penalty is $435 for returns filed before 2023 and $450 for returns filed in 2023 and onwards. Or, if it's less, the minimum penalty is the amount of 100% of the balance on the tax return. If you still do not file and pay after 5 months, the failure to file penalty will max out. Now for the failure to pay penalty. This penalty is not as severe as the failure to file penalty, but it can still pile up and cause a financial headache. The penalty is 0.5% of the unpaid tax balance on your tax return, or the balance the IRS has calculated if you did not properly disclose it. As with the failure to file penalty, the failure to pay penalty will not exceed 25% of your total tax balance. For both penalties, keep in mind that interest will accrue daily. Now, you may be wondering if you will go to jail for failing to pay your taxes. It is actually quite rare to be prosecuted and sentenced to prison time for tax evasion, especially if you are an average citizen simply forgetting about your taxes or being unable to pay due to financial hardships, and not a multimillionaire deliberately choosing to keep your tax balance to yourself. More commonly, if you do not file and pay your taxes and penalties, the IRS may put a lien on your property or a levy on your bank account and take money directly out of your paycheck. How do you avoid these penalties and consequences? File and pay your taxes on time. If you are unable to pay due to financial hardships even after requesting an extension, you should still file your tax return due to how significantly higher the penalties are for that type of transgression. Though you may be unable to pay the full balance immediately, you can get assistance from the IRS as long as you go through the proper channels. Doing so can get you an installment payment plan, which should hopefully make your tax obligation easier to fulfill. You can also be labeled under the currently not collectible status, which will stop the IRS from trying to collect taxes on you constantly. Though be careful, as interest and penalties will still accrue. Lastly, though unlikely to be granted, you may be eligible for an offer in compromise, which could persuade the IRS to waive your remaining tax balance. Do you currently owe the IRS back taxes? Or has the fear of owing a large balance prevented you from wanting to file your taxes for years? If you are not confident about staying off the IRS radar, consult with a tax professional to guide you along the way. At XQCPA, we gave you peace of mind by making sure your tax return is accurate, filed on time, and paid on time. As always, we will really appreciate it if you like, share, and subscribe to our channel so that we can continue to make great content for you. We will see you in the next video. Goodbye.